We all have finite resources. If you could only fund one, you could contribute the max to your Roth IRA or your HSA, which one would you choose? I know my answer. I'll explain why coming up. You guys know I love the Roth IRA. I love the Roth and get teased about it all the time here from my business partners and co-hosts of the Wise Money Show. You see that on Saturdays right here on this channel, our full 1 hour talk show. They call me Michael Paul Roth Bernard just because I love the Roth. It's not one size fits all, but a lot more people should be using it, and it is significantly impactful for building wealth and doing so in a way that keeps Uncle Sam out of it for the most part. But if you could only fund one, you had at your disposal, you could fund your Roth IRA or you could fund an HSA, which one would you choose? You'd think probably that I would say, oh, the Roth IRA. And it's a good choice. Guys, my answer is the HSA. My answer is the HSA. Now, both of them, you have to qualify. There are qualifications, and there are some things I like about one and some things I don't like about the other. And so anyway, so in order to qualify to be able to fund a Roth IRA, we often don't think of it like this, but in order to qualify to make a contribution to the Roth IRA, you have to have earned income. You got to have paycheck money. This can't just be dividends or pension or Social Security. We get that question a lot. Now you got to have earnings, paycheck money from a job. But then you also have this other qualification. You can't have too much overall income. And this is not paycheck money. This is total taxable income, or actually adjusted gross income. So yeah, you could actually fund a Roth IRA because you're working, but then all of a sudden have a capital gain because maybe you had other investments that aren't in the Roth IRA and you sold it and there's a big cap gain, and all of a sudden your income is above those thresholds, your adjusted gross income is above the threshold, and you actually couldn't do a Roth IRA. So I don't like that. Those are the qualifications to fund a Roth. Paycheck money, got to have earnings, but you can't have too much adjusted gross income. The HSA, in order to qualify for that, it's fairly simple. You need to have an HSA eligible, high deductible health plan, and then you can't have any other health insurance. That's got to be it. There is no income limit, so I do like that about the HSA. You also don't need to be working, although, yeah, I mean, if you're not working, if you're retired, you're likely on Medicare, and so yeah, that's interesting. But yeah, the HSA has a lower or lesser qualification, but yeah, not every health insurance plan is HSA eligible. But let's say you meet both criteria. You're working, and so you've got paycheck money, but your income is below the Roth IRA threshold, so you're eligible to fund a Roth IRA, and you've got an HSA eligible high deductible health plan. Which one would you make a contribution to? I would do the HSA. I would, and here's why. The HSA gives you a tax deduction today. It gives you a tax deduction today. All of the growth and all the investment activity is sheltered from tax. And then when you withdraw that HSA out there in the future, as long as it's for a qualifying medical expense, then that comes out tax-free. So it's the trifecta. You get 3 different tax benefits all in one account. So pre-tax in, tax-sheltered growth, and then tax-free out. The Roth IRA, you don't get a deduction on your contribution today. It doesn't help you today, unless you're getting the retirement savers tax credit, which I talk about a lot. But for most people, you don't get a tax benefit today. All the growth and activity is tax sheltered. And then when you withdraw the money, as long as you've had a Roth IRA for at least 5 years and you're age 59 and a half, you can withdraw those dollars, all of the growth, tax-free. So the Roth IRA, only 2 tax benefits where the HSA gives you 3, although the Roth IRA, you can use the withdrawals for a lot more reasons. There's no explanation. As long as you've had a Roth for 5 years and you're age 59 and a half, there's no explanation. You're fine. You can draw that growth out tax-free. My hunch, though, is you will have medical expenses in retirement. My hunch is you'll have medical expenses in retirement. And if you shoebox your HSA and you pay, the little odds and ends, the copays and the prescriptions and all that sort of stuff, if you pay that out of pocket and then hold on to your receipts, you'll have plenty of medical expenses out there in retirement. You can withdraw from your HSA and draw it out tax-free. Here's the caveat though. If you're thinking, and if you argue or you'd say the Roth, I want to see your comments below and give me the reasons. And listen, it's a great backup choice. But there's two caveats. In order to make funding the HSA the right choice, you got to do two things. You can't touch it and you got to invest it. You can't touch it and you got to invest it. If you're going to touch it, and I get it, you know, it's an HSA, so it's not hands off until 59 and a half. If you've got medical expenses in the short term, you can pull the money out of your HSA to cover those. But if you're going to do that, then you're better off funding the Roth. And because if you are constantly reaching your hand into your HSA, it's really not a great long-term growth and tax shelter for you. You're using it as a short-term medical expense or medical sinking fund that gives you a little tax advantage. You're really only getting 2 tax benefits, not 3. Because if you're using your HSA in the short term, there's not a lot of tax sheltered growth because you're putting the money in and you're taking it right out. It's the hokey pokey. Don't do that. Like if you're going to, and that's fine, but then the Roth IRA would be better. So you got to not touch it, not touch your HSA. And the way to do that is to set up your 3 bank account system where you're going to fund your HSA, but then you're also going to have some resources available for the nickel and dime, the little things that come up for your health insurance. If you hit your deductible, ideally you've got cash set aside for that and don't need to raid your HSA. And you'd want to hold on to your receipt because what that means is you've got a future withdrawal, future tax-free withdrawal from your HSA if you can cover it out of pocket. So that's caveat number 1. Don't touch your HSA. If you're given the choice, if the HSA is the right solution for you to fund, you can't touch it. But then because you're not touching it, it's now long-term dollars and you need to invest it. It wouldn't make sense. You know, I'd rather have you fund your Roth if you were going to make the contribution to your HSA, but then leave it in the HSA bank account where so many HSAs are, where it's earning point nothing and has some carrying costs, some fees with it, and therefore there's very little growth. Again, the power with the Roth IRA is on the tax-sheltered and tax-free growth, which means for your Roth IRA, you shouldn't be speculative, but you should be taking more risk with your Roth to get more long-term growth potential because that's where you're going to win from a tax standpoint. You got to do the same thing with the HSA. But again, if you're going to invest your HSA, then you're not going to want to touch it in the short term. So therefore, those two caveats play off each other. Given the choice for retirement and taxes, if you could only fund one, I'd fund the HSA for those couple of reasons. If you said, I've got an HSA available, but I don't have all the resources to be funding both, and therefore I've got to just pick one, and I don't have a 3 bank account system set up. Really, if I'm funding the HSA, I'm likely going to touch it if I get sick. You might want to fund the Roth IRA then. You got to work with your certified financial planner. For all of us, there's 6 areas to our financial life. Your present financial position is your cash flow and it's your net worth. This is where you're going to make this decision. But it also connects to your protection planning, it's health insurance, and your tax planning, right? Which one gives you the bigger tax benefit? Typically the HSA does, but if you don't invest the dollars, then the Roth IRA would give you more tax-free growth. And then investment planning, that's the 4th area. How are you going to invest these dollars? What does this mean for your retirement plan? That's the 5th area. 5 of the 6 areas, this simple question, should you fund your HSA or a Roth IRA? This simple question touches all 5 of the 6 areas. You got to work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.